Good morning, everyone. My name is Brian Hendricks. I'm the Policy and Supportive Services Unit Manager for the Illinois Department of Transportation, and we wanted to welcome you to the latest in our Building Blocks of Success workshop series, a popular topic called Calculating Overhead Rates. I see a lot, well, I was going to say I see a lot of familiar faces, but I see a lot of familiar names in our participant list today, so welcome to all of you. We're delighted to have once again Olga De La Rosa and Michelle Ringgold from Ringgold Financial Management Services. They are our consultant team for management assistance to DBEs in districts 1, 2, and 3. And I'm very delighted, I don't use this phrase lightly, to have one of my favorite coworkers here today to present on this topic, Ms. Megan Moldenhauer. So thank you all for being here. And Olga, the floor is yours.
Good morning. Thank you, Brian. Thank you, everyone, for joining us this morning. Again, today's workshop is 2024 Calculating Overhead Rates. And then, as Brian stated, today we have Michelle Ringgold, CPA MBA President and CEO of Ringgold Financial Management Services, presenting, and Megan Moldenhauer, CPA CFE Financial Review and Investigation Section Chief of IDOT. So just a bit of housekeeping. Please make sure you mute yourself and keep your video off. Like Brian said, today's workshop is very popular, so we want to make sure that all the attention, everything is focused on the workshop and all that helpful information you're about to receive. You can enter all questions in the Q&A, not the chat. We will answer questions throughout the presentation, so we'll be pausing throughout the presentation to see if there's any questions. And then also when we have our Q&A, you can unmute yourself or raise your hand and we'll answer questions as they come up. This session will be recorded and provided to firms in a follow-up email along with any additional helpful resources. And there may be a short survey following the presentation. Please let us know how we can help improve and any ideas for future workshops. So today's agenda, we've already gone through introduction and housekeeping. We're going to go over IDOT's goals, supportive services and resources, overhead rates overview, schedule of completion, which includes labor, executive compensation analysis, direct costs, indirect cost, cost accounting standards, accounting labor systems, use of a CPA, and then we'll go ahead and go to our Q&A and closing remarks. IDOT's goal. IDOT's goal is to provide assistance to DBE firms and individuals interested in doing business with the department in ways that ensure equity, access, and transparency. IDOT, in accordance with federal guidelines, strives to facilitate and implement programs that can help current and future business partners open the door to doing business with IDOT. The department works towards this goal in a variety of ways, most notably through the tools available at our resource centers. The supportive services program that is executed through our partnerships with consultants who provide management and technical supportive services assistance, and corresponding supportive services programs that fall under the umbrella of supportive services program. This support is provided at no charge to IDOT's DBE firms, to firms seeking IDOT DBE certification, to Illinois UCP DBE certified firms who have an IDOT contract, and to prime contractors doing business with IDOT. The Office of Business and Workforce Diversity, you can contact Brian Hendricks, who is the Policy and Supportive Service Unit Manager. His email's there. We're going to go over the Disadvantaged Business Enterprises Supportive Services. Learn and grow with supportive services. While opportunities may increase for certified DBEs, it is not guaranteed. Free programs and resources support firms' goals at all phases of growth. They help with developing technical and management skills, navigating operational expenses, connecting with established firms, discovering the best practices for successful work with IDOT. You can visit idot.illinois.gov to find your nearest resource center. Resource centers. Each of IDOT's 9 districts offer essential equipment and resources to conduct business with the agency. These resource centers have computer access, internet access, scanner, copier, printer that you can use staff assistance, including support for DBE applicants. These resource centers are free of charge to all firms seeking to do business with IDOT. You can scan the QR code or visit idot.illinois.gov for a list of locations in your district. You can go ahead and scan that QR code to view the list of resource centers. Contract compliance officers are accountable for EEO and labor compliance on state and federally funded programs. They ensure contractor compliance with safe federal laws and regulations governing the EEO and labor compliance and DBE programs. Visit idot.illinois.gov and search the contract compliance officer to find a local officer in your district. Technical and management assistance. Ongoing assistance helps DBEs maintain a competitive edge. This assistance is complementary to IDOT's DBE firms or to firms certified in the Illinois UCP that are bidding on IDOT contracts. For technical services, you can receive help in estimating and bidding, equipment and resources, project site inspection, and pre-qualification. Management supportive services include bookkeeping systems and credit restoration, bonding and insurance, business and strategic plans, and marketing. Supportive service consultants. So for certifications services for District 1 through 3, Theo Joyner from Ralph G. Moore and Associates. District 4 through 6, Melissa Hamilton, Synergetic Solutions. District 7 through 9, Mark Vaughn from FE Consulting. For management services for Districts 1 through 3, Michelle Ringgold from Ringgold Financial, and myself from Ringgold Financial. Our information is there. District 4 through 6, Melissa Hamilton from Synergetic Solutions. District 7 through 9, Mark Vaughn. And for technical services, Ron Brown from Gonzalez Companies, and he is the supportive service consultant for Districts 1 through 9. Workshop and events. The Borough of Small Business Enterprises brings innovative events to the public with the 3 goals in mind: to share skills to become more competitive on IDOT projects, help individuals and businesses work with IDOT and form strategic partnerships, encourage sharing of best practices, policy, and procedure changes. Each district hosts events year-round to help firms do their best work with IDOT. Today's challenge, tomorrow's reward, TCTR. IDOT's annual Today's Challenge, Tomorrow's Reward conference provides opportunities for networking, skill building, and knowledge sharing among our vendor network. All firms doing business with the department include primes and subcontractors, consultants, suppliers, and our various partners are welcome. Our next TCTR is in 2025, so you can call 217-782-5490 with any questions. Available programs. The DBE reimbursement program. IDOT offers 50% reimbursement to qualifying firms in select categories while funds are available, which include association organization membership cost, training or certification class, website capability statement and logo, and much more. You can contact the Borough of Small Business Enterprises to discuss criteria for these limited time funds. Business Development Program. Qualifying DBEs can receive firm-specific guidance to propel their growth in the transportation industry. Full business evaluation and analysis, tailored training that may be eligible for reimbursement, personalized recommendations to maintain competitiveness, how to apply. Enrollment opens once per year. 15 firms are accepted annually, and applications for 2024 will open soon. You can visit idot.illinois.gov for more details. Mobilization payments. To account for the preparatory work and operations necessary for the movement of subcontractor personnel, equipment, supplies, and incidentals to the work project site, and for all other work or operations that must be performed or costs incurred when beginning work, the contractor shall make a mobilization payment to each subcontractor. The mobilization payment must be made at least 7 days prior to the subcontractor starting work. The mobilization payment to the subcontractor is an advance payment of the reported amount of the subcontract and is not a payment in addition to the amount of the subcontract. Therefore, the amount of the advance payment will be deducted from future progress payments. The amount paid is a percentage of the value of the subcontract shown in this table below. The HCCTP program, the Highway Construction Careers Training Program, boosts participation of diverse individuals in the industry and on IDOT's highway construction projects. Illinois Community College partners offer training in industry trade and life skills, such as OSHA 10 certification, welding, forklift operation, first aid CPR AED, math for the trades, introduction to electrical, plumbing, sheet metal, carpentry, introduction to tools, and much more. Employment is not guaranteed. However, participants do receive a job placement assistance. 4 reasons why HCCTP graduates make ideal hires. They are well trained to fill entry-level roles, professional talent with diverse perspectives, eligible for work on IDOT project sites, reimbursement via IDOT training special provisions, TPG. Who can apply for the HCCTP program? Eligibility is open to women, minority groups, and other persons from historically underutilized populations. Must be at least 18 years old, have a high school diploma or GED, valid driver's license, and ability to pass a drug screening. So we're going to talk a little bit about Ringgold before we get started. Ringgold is led by our managing partner and President Michelle Ringgold. We are an Illinois licensed CPA and management advisory firm established in 2005. We are a certified DBE firm. We combine 3 major disciplines: auditing and accounting, regulatory compliance, risk management, and management advisory. And we offer turnkey solutions that maximize cost savings and efficiencies. We can deliver under one umbrella the highest quality to our clients by using available resources to provide timely, effective solutions. To reinforce these services, we offer a variety of training options on a customized basis. Ringgold has a proven track record of providing effective management and supportive services and has helped secure millions of banking and bonding lines of credits to DBE firms, as well as supporting DBE firms in providing accounting and administrative support that can help them sustain and grow their businesses. Our staff includes a talented group of licensed and certified public accountants, certified project managers, and business professionals. We provide DBE management supportive services in districts 1 through 3. Some of the services that we do provide under the management supportive services is QuickBooks and other accounting system support, business plan preparation, cash flow analysis, bonding and financing assistance, credit restoration, and much more. So we're going to go ahead and get started shortly. We just want to remind you to keep muted, keep your video off, and please enter your questions in the Q&A. Now I'm going to hand it over to Megan Moldenhauer. She's going to go ahead and get started with today's workshop. Thank you, Megan.
Thank you, Olga. Good morning, everybody. As I said, I'm Megan Moldenhauer. I'm with the Illinois Department of Transportation's Financial Review and Investigation section. We review all the overhead rates submitted to IDOT each year. I've been in this position for a couple of years, but I've been at IDOT for 13 years, all within this same office doing this same stuff. So I am the most senior person here doing this at this point. So I'm your person. If you ever have any questions, our contact information will be at the end. So with that, we'll get started. What is an indirect cost overhead rate? So I'll use those terms interchangeably, probably generally using overhead rate. Your overhead rate is your allowable indirect costs divided by your direct labor. This rate is applied to direct labor as incurred on projects to allow a firm to recover the appropriate share of indirect costs allowable per the terms of specific agreements. These costs need to be in accordance with 48 CFR Part 31, usually just termed as FAR or FAR Part 31. Also, the AASHTO audit guide is a good reference material. Below there's a link to the guide. Currently, the 2024 version just came out. It's for sale for $20, I believe. So if you don't already have one, I recommend getting one. It will help you immensely. Next slide. How does the overhead rate apply to IDOT? We get that a lot for new firms that have not done work with IDOT. So overhead rates are generally billed on IDOT or local agency projects against their direct labor. That direct labor is to be actual payroll rates that you bill IDOT. Then you apply the overhead rate to it, and that's how you determine how much overhead you would bill. So for example, we have an actual hourly rate of $60 an hour with an overhead rate of 120%. The overhead billed is $72. So you would essentially bill $60 and $72. Next slide, we have an example of an invoice in case for those of you who have not seen it. So if you've not seen it, this is one of the pages of the invoices where you put in your labor. You have your employees listed, how many hours they worked, and then their rate. That has to be their actual payroll rate. Then it comes down to a total. So in this example, we have $900 for labor. On the next slide, it'll carry over. And then, excuse me, you see $900 there circled for payroll. And then up towards the middle of the page, you've got 120% circled. So there's our 120% overhead rate. We multiply it times the $900, and that's how you get the $1,080 of overhead that is billed. So just, you know, like I said, if you've not seen it, that's kind of it in a nutshell of how these are billed to IDOT. Next slide. So let's talk about compiling the schedule. So we'll look at what the schedule format looks like. We'll discuss labor and executive compensation analysis, and then we'll go into direct costs and indirect costs. So the schedule format and layout, you can reference page 40 of the audit guide if you decide to get the audit guide. We also have one of the old versions that was before they started charging. We can't obviously send you the current version that they charge for, but we can send you the old version if anybody's interested. For the most part, it'll get you what you need. There's just been a couple tweaks these last couple of years. But if you need it, please reach out to me and I can surely give you that. We also have a spreadsheet that's the AASHTO Audit Guide Sample Overhead Schedule that we can provide. This kind of has the format set out for you in Excel to make things a little easier for you. When you're talking about your allocation base, as I mentioned at the beginning, your overhead rate is your allowable indirect cost divided by direct labor. So your allocation base is direct labor. To make it easy on yourselves, as I mentioned, we have that schedule, that Excel sheet, so that you can use that if you would like. Otherwise, a simple trick, if you will, to help you out is export your trial balance to Excel, and then you can just get rid of the rows that you don't need. That will help a lot with making sure even just the numbers that you start with are correct. We do have a lot of adjustments to overhead because numbers were incorrectly entered on the schedule. They don't tie to the trial balance, that kind of stuff. So that will help save you a little time with having to retype everything, all your numbers, all your accounts. Just a little helpful tip if you want to do it that way. Next slide. We've got an example of the schedule. So this is a screenshot from the audit guide that shows you how the schedule generally looks. Doesn't always have to look exactly like this. The template that we have, the Excel spreadsheet that we have, is set up like this, where you have all your accounts. And this is just for example purposes. Your accounts are probably titled differently. So when you go and calculate or put your schedule together, use your account names. You don't need to try to fit them into whatever these account names are. Use your own account numbers, account names. So you start off with your trial balance. You've got a column for disallowed costs. We'll talk about the allowability of costs in a little bit. And it gets you to your proposed labor, or I'm sorry, your proposed overhead. So that's the schedule in a nutshell. You usually will have references. You see down that notes column A, B, C, D, E, and they come down to a reference section where it tells why you made an adjustment. Those are extremely helpful for us. While they are not necessarily required, it answers a lot of questions that we don't have to ask you about. So keep that in mind when you're preparing a schedule. If you make adjustments, that would be very helpful to have that reference section completed so we know why you've made adjustments and don't have to ask questions. Going on to the next slide, we'll talk about labor. So labor has two categories, direct and indirect, and then your indirect has subcategories of allowable and unallowable. I'll stress this a lot. Like I said, your overhead rate is allowable indirect cost divided by your direct labor. So we'll be talking about figuring out allowable versus unallowable. Now, misclassifying your labor has an extremely significant effect on the overhead rate, and we'll talk about labor here in a little bit as far as calculating it. But it is extremely important to make sure it is calculated correctly, because if you're overstating your direct labor, as you know, math, you know, numerator, denominator, if your denominator is big, your number is going to be smaller. So same with if you're understating your direct labor, your overhead rate is going to be much higher than it should be. So it's extremely important to make sure we're getting this labor calculated properly. Next slide. So your components of direct labor, you've got obviously your regular time, overtime, any overtime attributable to the project, regular portion, and then there's the premium portion. That premium portion, if you don't know, is if you pay somebody time and a half, that extra half that you're paying them is called the premium portion of overtime. And it is generally not included in the actual base of your calculation, but it is considered direct and not part of overhead. So then you also have to consider any contract or 1099 labor that's direct, same with union labor. Those do need, depending on how you treat them, could be included in your direct labor base, or it could just be a direct cost that's not in your direct labor calculation, but it's also not allowed in your overhead. So if you find yourself in that situation, you have contract labor, in all honesty, it's probably best to reach out to make sure how you should account for them in your overhead. Also, it's important to remember that direct labor in excess of contract upper limits is still direct labor. So if you're working on an IDOT project, you hit the max on your contract and you can't bill anymore, if you're still incurring costs, that's still direct labor and it cannot go in your overhead. That's kind of a common thing we see sometimes is firms don't understand that, so just make sure you're aware of that. Next slide. Your components of indirect labor include, but not limited to, your administrative work, paid time off, bid and proposal work, training, overtime related to indirect activities, I should say. So these are activities that are not directly related to a project. They cannot be applicable to any one cost objective. So that's how you kind of need to think about whether it's direct versus indirect labor. Next slide. We'll talk a little bit about overtime, whether it's uncompensated overtime or compensated overtime. As we mentioned, you have the premium portion of overtime if it's compensated, and you have to account for it consistently. If it's a direct cost that you are billing as a direct cost, then all direct premium overtime needs to be considered direct. But if depending on your company's policy for how you bill overtime, it could also end up being indirect. It's just however you treat it as a company, you have to be consistent no matter what project you're working on, no matter who the client is, type of compensation for that project. You just have to be consistent with how you're treating your overtime. Let's see, next slide. So for calculating direct and indirect labor, for hourly employees, it's going to be the easiest. So you'll have your direct labor dollars will equal the direct hours times their actual hourly rate, and indirect labor would be their indirect hours times their actual hourly rate. And then if there's any overtime, you'd calculate it, the overtime hours times the premium amount. So like I said, if you're paying time and a half, it's that half time, and that would be your premium overtime. Like I said, your actual hourly rate is actually what you are paying that employee. These, on these IDOT projects, these are actual cost projects. So these are not loaded rate. You have to pay, you bill us what you pay them. Yep, next slide. So calculating the direct and indirect for a salaried person with compensated overtime, it's going to be similar to your hourly person because they're getting paid for all the hours they're working. It's just how you're calculating your hourly rate is generally going to be whatever their salary is divided by 20/80 hours, which is 40 hours for 52 weeks. So that's kind of the difference between that and the hourly, is calculating that standard hourly rate. But everything else is still calculated similarly. It's direct hours times that rate, indirect hours times that hourly rate, and that's how you're calculating it. And then same with the premium portion of overtime. Next slide. Now, uncompensated overtime is where it gets a little hairy, if you will. So you do the same as you would with the hourly person. You have your direct hours, you have your standard hourly rate, your indirect hours times your standard hourly rate. But if that person worked over 20/80 hours, those two numbers aren't going to total what you actually paid them. So because they worked over 20/80 hours. So in that instance, you'll have what's called a variance, and that variance gets applied to indirect labor. So if you go to the next slide, we have, this is a screenshot from the AASHTO audit guide where it kind of illustrates for you. You have your direct hours of 2,000, indirect hours of 600. So already they're working over 20/80 hours, the normal work week. So their annual salary is $72,800. The standard hourly rate would be that $72,800 divided by 20/80 hours is $35 an hour. So then they're taking that $35 an hour times the direct hours, which gets you the $70,000. Indirect labor would be the $35 an hour times the indirect hours of 600. So then adding those together obviously are going to be more than the $72,800 salary. So then there's a variance of $18,200 that was calculated. So when you're going to your overhead schedule and you're calculating the final direct and indirect labor, your direct labor is always going to be whatever you calculated as the hourly rate times the direct hours. So you still have 70,000 there, but your indirect labor has to be the indirect labor calculated minus that variance. So you'll see that the indirect labor in this situation for this employee ended up only being $2,800. So that's kind of where it gets a little off the rails for the salary variance people if you are not familiar with how that works. So next slide. So here's your overhead schedule. We've got the direct labor at the top circled. That's where you would have that broken out on your schedule. I've also circled where there's PTO time. Generally, that's included with when you're doing your calculation, and then your indirect labor is also circled out. You are not required to break out the the PTO time or anything like that. It just, in this example, is broken out. There are a lot of firms that just have direct labor, and indirect labor covers everything. That's acceptable. So don't think you have to break everything out if it's not already broken out on your trial balance. All right, the next, one thing to note, it is not acceptable to estimate direct and indirect labor. A lot of times when we get firms that it's their first time submitting to us, when we question how direct and indirect labor are calculated, we'll get a spreadsheet of this person is 90% direct, 10% indirect. This person is, and they're just estimated percentages. That's not acceptable. As I mentioned earlier, overstating and understating those labor accounts can have a huge effect on overhead. We want to make sure it's accurate. So the only way it's going to be accurate is tracking the hours worked and then using those to actually calculate the labor. All right, next.
Megan, we do have a question in the chat.
Sure.
Brian's asking if you have subcontractors, is there a maximum amount of markup you can charge for subcontractors you are managing?
So if you are working on, if this is an IDOT project that's called that's an actual cost contract, you cannot mark up subcontractor charges. What we do to accommodate that is in what's called the fixed fee, which is the profit that we calculate for that contract. There is and I'm not 100% sure if this is the same on local roads, on projects through local agencies, but if it's a straight project with the department, it takes into the profit calculation takes into account how many subcontractors you have. So if you have, the more subcontractors you have, the more additional profit you'll get. So like I said, you don't mark up anything. Everything you bill to us is actual cost, and then any profit you would make is from that calculation. I hope that helps answer your question. Okay, so we'll go on to the executive compensation analysis. All firms are required to do this annually. You submit it when you submit your, Olga, we'll have to go back because there's a follow-up question to that. So management or administrative associated with those subs. If there's actual labor hours that you are managing those sub-consultants, you are allowed to bill those hours. I think that's what you're asking. If not, and you can always contact me directly too if you have specific examples you want to provide. Oh, okay, good. That answers your question. Good. Okay, so we'll move on. Executive compensation analysis. Like I said, all firms are required to do this. Next slide. This is generally done with what's called the National Compensation Matrix. This is to determine the reasonableness of compensation for the executives. So I'll walk through what what's called the NCM, National Compensation Matrix. I'll walk through what it looks like. It can be a little intimidating right off the bat, but I promise it's not too bad. This is updated annually and posted to AASHTO's website. We do have a lot of firms that will email us when they're putting their overhead rate together and ask if we have the newest version. That's perfectly acceptable. That's not a problem. We can easily send it to you. I also put the link down there at the bottom so that if you want to just go out there and get it yourself, you're obviously more than welcome to. That's the link for you. So next slide. And yes, I know this is outdated. I did not put the most recent one in there, but the spreadsheet, the workbook has several tabs to it and some embedded links. So there are instructions position descriptions to help you figure out which position you should use when benchmarking. There's Q&As, and then there's examples and stuff like that. So next slide. This is where you'll start. You've got the tool. You put in your revenues, and this should be what's on your trial balance, not if your tax return differs from your trial balance, use your trial balance number. That's kind of something we see a lot. So you'll enter your gross revenues, and then it'll provide what's called the reasonable compensation for each of those positions listed. Next slide. So then you start completing this schedule. The schedule should list everybody who's in an executive position, not just the top 5. Somewhere it says top 5, but it should be everybody listed. So you're going to put in there everybody, their position, name or employee ID number, their salary, their bonus, and that bonus, if you're on accrual, that bonus should be what they incurred during the year you're doing. So if you know, Sam is your CFO, you accrued $20,000 bonus for him during 23, but you didn't pay it until 24. You're still going to include it on 23. You're still going to include that in here because it was incurred during 23. That's something that's an adjustment we have to make a lot. You've got a column for deferred compensation, other compensation. We'll kind of talk about what some of that stuff is. And then any adjustments for unallowable activities or forms of compensation, we'll talk about those. And then that step 4 is where you put those numbers from that tool that we just used. And then it'll automatically calculate if there's any adjustment needed for excess compensation. All right, so next slide. So total compensation includes but not limited to salary, bonus, deferred comp, employer portion of retirement, any vehicle allowances or any other special allowances they get, and then fair market value of stocks received. Next slide. Compensation from unallowable activities, things like entertainment, lobbying, advertising, charitable activities. So when I said earlier, you need to track your the labor, all hours worked. It's for all hours, all individuals, and then these types of activities that are not allowable, those need to also be tracked because then you'll have to make an adjustment for them at the end of the year on that overhead schedule. So just bear that in mind. If anybody's performing any activities that are unallowable, those still need to be tracked and removed from overhead at the end of the year. Next slide. So unallowable forms of compensation include but not limited to distribution of profits. Those are expressly unallowable. So usually you see that with the smaller firms just distributing, it's the end of the year, distributing the profit to their owners. That's not allowable. Compensation based on changes in prices of corporate securities and compensation incidental to business acquisitions. There's been a lot of business acquisitions lately. It's kind of been crazy. So if you end up in that situation, somebody's acquiring you, you're acquiring them, those hours related to business acquisitions should be tracked and removed from overhead. All right, next slide. So we're coming back to the schedule, and you'll see on there bonuses are circled, and there's an adjustment to it, A. And so if you go down to A, I don't know how well you guys can see this. I hope you can. So A says executive compensation in excess of reasonable amount is disallowed. So that's where we're talking about that national compensation matrix schedule. That's where it's making an adjustment because there was excess compensation. Then indirect, it says there's an adjustment for 3,300 for C, and it says labor costs associated with advertising, entertainment, and other unallowable activities is disallowed. So that's where they're making that adjustment for any of those activities that are not allowable. All right, next. All right, so we'll talk about direct costs now. Direct costs are not allowed in the overhead as they are not indirect costs. So as I said, your overhead is your allowable indirect costs divided by direct labor. So direct costs are not included in that. Any costs that can be specifically identified specifically with a particular contract or project cannot be allocated to multiple projects. If you're renting a piece of equipment that you're using on multiple projects, you can't charge both projects the total for that rental. You'd have to allocate it some sort of way. You cannot charge the same amount for multiple projects. Cost must be actual. No markup is allowed, kind of as I mentioned earlier. And then the AASHTO Audit Guide chapters 4.6 and 5.3 are a good reference for this. And then FAR 31202 and 31203. Next. Here we go. The types of direct costs, we'll discuss in-house direct costs, which are using company assets. Outside direct costs are third-party vendors, anything that's not a company asset. Those are easy to identify and exclude from overhead because they're generally just you receive an invoice, pay it, and that whole amount of that is indirect or direct. I'm sorry. And then all of these must be removed from overhead, whether they are billable or not. So what I mean by that is same with labor. If you get to the end of the budget on a project, you're at your upper limit, but you're still incurring costs. Even though you cannot bill them, those are still direct costs and must be removed from overhead. Same with if you are doing a lump sum project, and on actual cost contract, if you consider a lot of firms bill mileage. If you consider mileage a direct cost when you're billing an actual cost contract, when you are working on a lump sum project, any vehicle costs that are incurred because of that project still have to come out, even though you don't bill them directly because it's a lump sum contract. So bear that in mind as well. Next slide. So your in-house direct costs, the ones we commonly see, copies, CAD, autos, survey equipment, boats, ATVs, and any other company-owned equipment. And like I said, you must remove the direct portion of these from overhead. So if you have these expenses and you're unsure, I mean, feel free to reach out. We can discuss the best ways to do this, because sometimes it depends on what the cost is as to what the best way to remove it is. So next slide, we'll talk about outside direct costs. As I said, these are third party. So your lodging, meals, and travel, those are things that you will have actual receipts for. Employee mileage reimbursement, you're reimbursing your employee for that mileage. That's technically a third party. And so that's considered an outside direct cost. Any rentals and supplies, any copies from, if you go to Kinko's and you are paying them to do the copies, that's considered an outside cost because it's not your copier. Subconsultants are also a direct cost. A helpful tip for outside direct costs would be to set up direct cost accounts so that when you incur these expenses and you record them in your general ledger, you just automatically record them to a direct cost account. So then when at the end of the year, when you're doing your overhead, you don't have to worry about making sure you take the correct amount out. You already have them set aside and you just don't include them on your overhead schedule. All right, next slide. So you'll see Here's our schedule again. Down at the bottom, they have a direct cost recovery. And in that, the FAR references, it talks about internal allocation of direct cost credit. So that's what they're doing, is that's their in-house direct costs that they've determined how much is directly related to projects, and they're making an adjustment at the bottom for it. Not everybody will present it like this. That's just how this example is. There's several ways that it can be presented, so don't think that that's how it has to be done. Like I said, if you have questions, I'd rather you ask and we talk about it beforehand than us have questions on it later. It just makes things easier. Next section. All right, we'll talk about indirect costs. We're not going to go line by line. This is going to be very high level. So if you have specific questions or certain costs you want to look into, you'll have the tools to figure out where to look. So what determines allowability is, like I said, it's FAR Part 31, and then the AASHTO Audit Guide Chapter 8 is a good interpretive guidance for the different types of indirect costs. So I highly recommend referencing Chapter 8 to get started. Keep in mind that deductible for tax purposes does not mean it's allowable under FAR. So things like charitable contributions, accelerated depreciation, interest are not allowable under FAR, even though they are deductible for tax purposes. So just bear that in mind. Next slide. Let's talk about vehicle costs. Engineering consultants are required to maintain adequate documentation, such as vehicle logs completed in accordance with IRS requirements, to establish that the vehicle costs in the indirect cost pool exclude personal use, direct project costs, and travel associated with any unallowable business-related activities, lobbying, general advertising, and entertainment. So basically, just like we talked about with labor, if you have vehicle costs related to those unallowable activities, that is also not allowed, and an adjustment will have to be made. Personal use of a vehicle, that's up to you, that's fine, but the personal use portion is not allowed in the overhead. So basically, just like you have to track all your labor hours, mileage has to be tracked as well to ensure that first off, it supports any direct billings that you have. If you come to IDOT and you're billing for 100 miles, we would want to see the logs to support that 100 miles. So then also the indirect side of it is, were any indirect activities that you use that vehicle for, were those allowable? So I don't think I have it in the presentation. Oh, I do have an example. Next page is an example. We just pulled this from the IRS website. Does not have to look like this, but it needs to have similar columns, your date, your destination. What was that business purpose for? As I mentioned, it's got to have that information so we know, was it used for an allowable purpose? Starting and ending odometer readings. Generally, you'll have, how many miles it totaled. And then, of course, that expense section, that's not necessarily, if you want it for what you guys are doing, that's fine. But we don't necessarily need that. It's that expense section's up to you. We just mostly need that, first 3/4 of this. Let's see. Okay, there's a question. Am I okay to read the question, Olga?
It's up to you.
Okay, I'll just go ahead and read it real quick so I don't forget it. Will IDOT do a FAR compliance audit for a firm? And if so, will it provide the descriptions of any gaps discovered in the audit? So our intention is to do a pre-award audit for any new firms so that we can help you guys get set up. If there are any issues, any gaps, as you mentioned, we can help get those closed up so that going forward, you're set to, you know, we don't have any issues, you're set up properly, that kind of thing. So that is our intention. If you want one, we happily will do it. Of course, you know, you don't get a lot of people wanting to be audited, but we will certainly try to catch all new firms. We haven't been able to do that much lately, but we are getting ready to start doing some again. So yes, hopefully you would get an audit early on so that you don't find out years down the road you've been doing something wrong. All right, sorry. Vehicle costs. So next page.
He's got one more question. Can I request a pre-award audit, or is that part of the business process before securing a contract?
I would, if you want one, to make sure you get one, I would say go ahead and contact me and request it from me. That way we make sure you're on the list, because, you know, sometimes things happen and we can't get them done that year. So if I know somebody really wants it, we will make sure we get out there. So yes, go ahead and request it, and we'll set something up.
Okay, I think we're good. We can move on.
Okay, vehicle costs. Next page, slide, whatever it's called. Okay, so luxury vehicles need special consideration. We've found a lot of luxury vehicles lately. What we look for is what's reasonable. Generally speaking, you don't need a luxury vehicle to perform the duties of the job. So we will make adjustments to what would be reasonable. Yes, it is subjective. If a firm has already put together some sort of analysis to determine what would be reasonable, we will happily review it. Otherwise, we look at a lot of different factors to determine what would be reasonable for a luxury vehicle. So just bear that in mind. As I mentioned, personal use commuting is unallowable. You have to track that mileage and disallow it. If you do not track the personal mileage, basically any missing mileage would be unallowable. So it's not uncommon that the owner of a small firm uses that vehicle for everything personally. So there's a lot of personal mileage. Not uncommon. Like I said, it's okay as long as you're tracking, as long as those miles are not you're making an adjustment for them. So if there's a lot of them and it's tedious to track all the personal mileage, that's fine. Don't track it, and just know that anything missing is unallowable, and make sure you make that adjustment at the end of the year. Your FAR reference 31205-6M2. And then this is regardless of if it's on the employee's W-2 or not, but it's unallowable no matter what. Excuse me, next page. So unallowable indirect costs, as I mentioned, Chapter 6 is extremely helpful. There's a table 8-1 of the audit guide. There's an example on there's the screenshot on the following slide. It lists common unallowable costs. So that's a very helpful table, just a quick reference to get a feel for what's allowable, what's not allowable. And then Appendix C of the audit guide provides a more expansive list to help you with allowable versus unallowable costs as well. Next slide. We have our screenshot of the common unallowable indirect costs. As we mentioned, you know, you have your advertising, you know, bad debts, collection costs, personal use of vehicles, contributions, donations, fines and penalties, interest, lobbying, stuff like that. So, you know, take a look at that. Any alcohol, that's obviously unallowable. And that'll help you get started. So next slide. So as we mentioned, the automobile expense, so we've got that highlighted. There's an adjustment of 13,000 some odd on here. Says it's E, and that says that's an adjustment for personal use of company assets autos that is disallowed. So that's how they represented disallowing the personal use of it. And then basically that whole FAR section is just a list of the different unallowable costs that they made adjustments for. So that, you know, you can kind of look at that and see what were they making adjustments for. That kind of helps you to kind of understand what's allowed, what's not. So next slide. Please remember, if you have any income to offset or reimbursements, refunds of expenses, those need to, if they're related to items that are on the overhead schedule, they have to show up as a credit on the overhead schedule. So one of the easiest examples would be an insurance reimbursement or reimbursement or returning supplies for a refund. That has to offset the expenses. The thing that's coming up most lately, the employee retention credits. Those would have to be a credit against the indirect costs because that's where those costs were originally included in the first place. So I hope that kind of makes sense. Next slide. So supporting documentation includes but not limited to timesheets. As I mentioned, all employees are required to keep timesheets for all hours worked, usage logs for autos and special equipment, bank records, tax documents, invoices, receipts, business purposes on everything, staff information. If you're, you know, if you're taking people to lunch, if you're having meetings, you know, who's all, if you send people to a conference, who went? We need to know that information if we were to do an audit. Any account codes of where you posted that transaction. Just at the end of the day, the support has to be there. If there's no support, it did not happen. So we would not be able to allow those costs as indirect costs. So next slide. The burden of proof is on the consultant. Costs must be supported, and per FAR, engineering consultants must maintain adequate records, including supporting documentations to demonstrate that the costs comply with applicable FAR cost principles. The contracting officer may disallow all or part of any cost claim that lacks adequate support. That was when I said, if you don't have support, it didn't happen, so we cannot allow it. So just make sure you're keeping everything. I know it could be overly burdensome, but I guess at the end of the day, that's the price you pay for working with the government. That sounds bad, but that's what it is. Your private clients probably don't need this information, but we do. So bear that in mind as you're going through this process. So, next. This next section, I'll turn over to Michelle.
Thank you, Megan. Good morning, everyone. I'm Michelle Ringgold. As Owen Bryan introduced me, and I'm one of the partners over at Ringgold, and I'll be covering the accounting labor systems. So if you can go to this next slide, Owen. So, the contract, it's important that we maintain an operable accounting system under the general ledger control system. And it's really important that you have a system set up that can project costs or job costs, or at least segregate your cost components as it relates to direct costs, indirect costs, allowable and unallowable. This will make your life so much easier when you're trying to submit your overhead or indirect rate to the state, and there's needed to be details, especially if you're using QuickBooks or any other system for that matter. If your system is segregated properly, it's very easy to reconcile to the trial balance, as well as, come up with the support needed to validate the various costs. So it's important that your system has the ability to segregate, and if you need help with that, that is one of the services that we offer under the supportive services. Identifying direct costs by cost objective. is very, very important. So not only, just not lumping all of your direct costs together, but having it segregated so that it's easily identified, having your labor segregated, having your fringes or direct costs related to the labor segregated, and things like that. And you can always refer to the AASHTO uniform guidance, and it's outlined in chapter 6.4. Next slide. Fundamentals of your basic accounting system, basis of accounting. We're going to talk about cost accounting system and labor reporting system. So if you could just advance to the next slide. So you have two different reporting, and IDOT does accept both. It just needs to be consistent. You can't be flip-flopping. We do know that, the accrual base is based on GAAP, generally accepted accounting principles, but a lot of folks do prefer perform their books on a cash basis, which is acceptable. So basically, a cash basis system is where the expenses are reported on the income statement or profit and loss when the cash is paid out, and revenues are reported on the income statement at the period the cash is received from customers. So it's really based on, when the cash is paid out opposed to when I actually accrue for the cash. And the same thing on the sales side is when I'm collecting, not necessarily when I perform the work and reported it in my accounts receivable. For the accrual basis, expenses are reported on the income statement or P&L in the period that they occur or when they expire, which is often in a period different from when the payment is due. So you may perform the work in the month of February. You may not get paid until 30 days after, so that payment may come sometimes towards the end of the end of the month of March. But in an accrual-based system, you would be posting that income or those sales in the month that the work that was performed, which would be February. And then the same thing with your expenses, you would be reporting them at the time that they're accrued. So if I had a sub-consultant or a subcontractor on the project for the month of February, I may not pay that subcontractor or sub-consultant until March when I get my payment, but we would definitely recognize the accounts payable and the expense at the on an accrual method at the time that the cost was incurred. So those are the two types of basis that accounting that I wanted to explain, and both are acceptable. We just can't flip-flop, and you need to be consistent. Next slide. Direct costs, those are billable costs, costs within the contract period, costs in the contract upper limits, and direct costs, allowable and unallowable is what we're going to be discussing. Next slide. We want to be consistent with how we handle our costs, whether that's with IDOT or if you have LP labor agreements or private clients. We need to be consistent on how we handle it. You cannot handle your accounting one way for another client and the other way for another client. We want to make sure that you're consistent. Lump sum and loaded rate contracts, if it's direct costs, it must still be tracked, even if it's a lump sum contract. Direct costs that's above the contract limit can't be recovered in the overhead and can't be moved to another contract. So, if it's over the standard, it is excluded, and you can't apply it to another contract that you have in efforts to try to recover those funds. Next slide. You want to make your system work for you and make it, easy to compile your your schedule. And again, as I mentioned earlier, that includes segregating your allowable and unallowable costs, as well as your direct and indirect accounts. And if you're using different systems, you can do this through setting up different general ledger accounts. You can also use what we call cost classes to easily segregate that out. You also want to keep your labor accounts separate. This includes, if your timekeeping system, this includes direct and indirect and, things that are not billable and unbillable. And again, you can do this through setting up a separate GL account, or you can use, cost class identifiers as well. And if you're needing help setting up, your GL or your cost accounts so that you can make this process a little bit easier when compiling this information, you certainly can contact our office and we can assist. Next slide. So your labor charging system, you need to segregate it properly. You need to treat, all other direct costs and hours attributed to a particular contract. You need to be able to make sure that that's categorized and coded properly. Indirect labor, those are costs that are not directly related. For example, your office reception is a perfect example of an indirect cost. And you need to make sure that if there's unallowable activity, that it is removed from your overhead and you're able to track it and segregate it in your system separately. Next slide. Detailed time cards are required for all employees and owners of all hours of work, whether paid or not. And I know Megan went into detail about that. The different time keeping systems, whether manually or automated. I mean, you have to have a policy in place. You can refer to the AASHTO guide to get information about labor charging systems and internal controls. But as Megan indicated, the responsibility and the burden of proof is on the contractor, and you have a responsibility to make sure that you have a system in place that's effective, but you can also pull that information to support the labor and what you're submitting to the state. I can't tell you how many times and how many issues we've had where the overhead rate has been challenged or not been supported because of the lack of time cards keeping, as well as the information that is gathered. And again, I think the AASHTO guide does a really good job of providing a template and kind of the guidelines on how this works.
We have some questions, Michelle. We have 3 questions from Brian. So is the 2012 AASHTO audit guide the standard for FAR compliance?
There's a new one out, right, Megan? I think they charge for it now. That may just be the one that we've had. And I think that Megan may have stated up front that there was, we have some older documents because now they charge for them. Is that correct, that you have to go online and you can purchase the most updated guide?
Correct. Yep, that's correct. I would say, as far as that question, the FAR is going to be what you're looking, the overarching, that's the final say. The audit guide is just a helpful interpretation of it, but there shouldn't be anything conflicting because the states put that guide together with other CPA firms that have experience in the industry. So as far as your FAR is your overarching regulation, that the guide is just an interpretation. And yeah, the 2012 was the last one that was free. So that's the one we can send out. But as I mentioned, 2024 just came out. So that one is available now for purchase.
Okay. Is there a template we can use to help us standardize our processes and integrate them into our accounting system?
I feel like the ASTA guide does do a very good job on not only giving guidance, but also providing various templates. I don't know if you have any standard templates, but I know that we can, if you call our office, we can help you with some of the templates and the best practices as well. And Megan, I don't know if you want to add to that.
Yeah, we don't have any set thing. We just analyze what you have, and we try not to get too in depth into suggesting stuff, because it could then we'd be auditing our process that we gave you. So we kind of have to be a little independent of that. Michelle, yeah, if you have something, that's probably a good start.
Yeah, and I definitely think the AASHTO audit guide, they do provide some templates, and they also provide the rules and regulations, and understand that each industry is different and entities are different on how they do things. So I think the best thing to do is make an appointment with our office, and we can assist you on setting something up.
Okay. Also, does a template for internal controls exist?
So again, the AASHTO guide does lay out a lot of the guidance for internal controls, and we do have some standard best practices, internal control guides, and templates that we've done for others. So again, if it's the same person or a different person, I recommend that you reach out to our office, and we can assist for your individual needs.
Okay. That's all for the questions right now.
Okay. All right, so we could just go to the next slide because we already went over so the record keeping requirements. Just want to, again, refer you to the, the FAR 3.201-2D. Consultants must maintain adequate records to demonstrate that claim costs have been incurred and are allowable to contracts. And, there's more detail about that in the FAR, but again, it is your responsibility. The burden is on the contractor to make sure that they understand all of the rules and requirements, and that they're able to have the documentation needed should there be an audit and things are requested to help validate the information that you're submitting. Next slide. So again, this comes out of the AASHTO guide, but this is kind of a labor checklist of things that you should be looking at. We use this list all the time. Again, we can set up a meeting with you, but we have this in the presentation, and it is a nice checklist, along with other checklists and guidance that's included in the AASHTO guide. But we thought we would just show this so that you can see some of the characteristics. I'm not going to read them all, but just doing a self-check on your system to see if you're compliant. Does your system or your labor charging system have the ability to segregate the responsibilities and tasks as it relates to, to labor? Who's responsible for, initiating the budgets and approving time, and just kind of making sure that you have the necessary internal controls in place. Are individual employees routinely made aware of the internal controls, and are they aware of what the rules and things are? And if they are, how are you communicating that to your employees to ensure that they understand the requirements? Understanding that you have someone that is actually preparing the timesheets. Is there a company, procedure that's available? Are you using a manual system versus an automated system? I'm not going to read all of these, but these are just really important things that you can do as a self-assessment as well, just to see, how you, are you meeting a lot of the requirements and best practices and recommendations. Next slide. The use of a CPA. So, CPA is a certified public accounting. That's what our firm is. And there's you can be a certified public accountant and not be licensed. A certified public accountant is, one that has passed the exam, and a licensed CPA. There's other credentials, including experience and things like that, in order to become licensed. And a lot of CPAs, if they're not practicing publicly, they do. They're just CPAs, and they do not pursue, the license, because there's continued education as well as other things that have to be maintained. But long story short, there's 3 different levels of financial statements that's required by or that is produced by a CPA. One is a compilation, which is the lowest level of financial statements. And really, we're not offering any type of guarantee on these financial statements. They are the financial statements of the individual organization, but we are ensuring that the financial statements are in compliance with, GAAP, meaning that assets are placed where they should be, liabilities are placed where they need to be, and so forth. But that is the lowest level that a CPA can issue. And then as it relates to a compilation, just a quick note, you do not have to be a certified public accountant to issue a compilation. You can issue a compilation internally, but a lot of folks do ask if the compilation is prepared by a CPA. A review level financial statement is the second to the highest, or just a step above compilation. And what that requires is we do a little bit more than just taking your financials and putting them in accordance with GAAP. We do all of that we do in a compilation, but it's also followed up by analytics, where we compare trends, profit margins, and other relationship type analysis. So, for example, if you typically are making 20% on a regular basis on specific projects, and now you're making 30%, we may want to make sure that that's reasonable, and we'll do some, follow-up questions or even analytics to make sure that there's no errors. Or, for example, if we see that you have a loan on your books, but we don't see interest associated with that loan, that's a kind of an account relationship type thing, where if you have loans, there should be interest. So these are the different analysis and walkthroughs that we would perform just to ensure that the financial statements are free of errors, and it's a little bit higher level than a compilation. And then finally, an audit, which is the highest level of financial statements that a CPA firm would perform. And an audit, really, we do everything in a compilation. We do all the tasks that's in a review. But the biggest difference of an audit is, we do some independent verification, so we don't necessarily take your word for it. We have to independently validate that if you have $1 million in receivables sitting on your books, accounts receivable, we'll go to that customer directly and independently through what we call an AR, accounts receivable confirmation, and just validate that you are indeed owed the funds that is being reflected on your balance sheet. Or if you have a ton of inventory, and you're showing that inventory at a certain dollar amount on your balance sheet, we will, want to go in and physically count that inventory to make sure those numbers are correct, and we render an opinion. So a review and an audit is the highest level, and only can be performed by a licensed CPA. So you can't be just a certified, you have to be a licensed, whereas a compilation can be actually performed not only by a certified public accountant, but it can be performed by a bookkeeper or an accounting person as well. Just to be clear, for the overhead calculations. An audit, a CPA audit is not, necessarily required. It's not required. You can put this information together internally with no issues. Next slide. So factors that you should consider when you're hiring a CPA, especially if they're, going to be helping you with the overhead overhead calculations, or really any government requirements where you're doing an audit, because we do have what we call GAGAS, which is government auditing standard, and requires specific continuing education around, government auditing and accounting. I would always ask for a favorable peer review report so that you can see that the organization or the CPA that you're using, have a good peer review report, and there has not been any issues with their overall internal control procedures internally. You want to make sure that your CPA is versed in governmental accounting and audits, as well as FAR Part 31 cost principles, making sure that they understand cost accounting standards so that they can help you, segregate, your costs and help you set up the systems. Be familiar with the various laws and rules, because they are a little different than your private requirements. And travel regulations is important. I know a lot of times just not keeping those logs up to date and not giving the right information that Megan went over is a common issue for folks. So, you can use your CPA to help you develop and track that, and you can even automate it and track it in your system. Guidelines and recommendations in the audit guide, and ensuring that the firm that you're engaged in just understands the requirements and have some proven track records of the experience as it relates to this work. Next slide. I'm not going to read all of these, but there are some other, factors here that is listed here, and you can go through them. We will share this presentation. So if you can just go to the next slide here. And with that, I will turn it back over to Megan so she can go over some of the IDOT pre-qualifications and other things. So Megan, thank you.
Thank you, Michelle. So I see some familiar names on here. So some of you guys have already probably completed the internal control questionnaire. For those of you that are new, and even those of you who have completed it, it's required each year. If you don't understand a question, please ask. Please reach out to me or my staff. It makes things much easier for us if we talk about it and you're able to answer it correctly based off of understanding the question, versus you answering it incorrectly, and then we spend a lot of time during the review trying to hone in on the effects of you answering that question that way, and then just to find out you just didn't understand and we've wasted your time, our time. We don't want to do that. It's a frustrating process as it is. We don't want to add to it. So if you're going through that and you're not 100% sure what that question means, please feel free to reach out. That's what we're here for. Stay connected. So this is the subscription service for our Bureau of Design and Environment, who oversees the pre-qualification process for IDOT. Any important news comes out through that subscription service. If there's anything financially we feel the consultant community needs to know, we request them to send out an email through this subscription service. So if you are not already subscribed, I highly recommend it so that you can stay up to date on anything that comes out from IDOT. Let's see, next slide. Oh, and then I guess there's our contact information. If you guys have any questions, please feel free to reach out to I'm sure any one of us. I'm not alone, I'm sure. Michelle, I'm sure you agree.
Okay, we have one question in the chat. Do you have to be local to be able to get the audit?
No, not necessarily, no. I will say, I think, Brian, you had asked about being out of state. So if you're out of state, it will probably depend on our management at the time if they will let us travel out of state for an audit. If they will not, we will do the best we can remotely, but we would obviously prefer to come in person. There's just a lot more you can do in person, in my opinion, than virtually. So either way will make it work, but generally you would not get this audit until you have received a project. So that's what triggers us to do an audit.
Okay, we're opening the floor up now for any questions. If you have any questions, raise your hand, or you can go ahead and unmute yourself. Take advantage that we have Megan on here and Michelle, who are experts at this.
I think we can move on. I mean, a lot of questions were asked along the way, so if they have any other questions, they can read out. Oh, there's one.
What if you are a subcontractor, are you still going to get that audit, and how much time typically elapses between project start and audit?
It usually depends on, yes, subcontractors would still get an audit, and it would usually be between, it could be up to a year after getting the project. We wait till the agreement's in place, because part of that audit is how did you what did you use to come up with the estimate for that project? We look at all that stuff. So it very well could be up to a year. We're trying to get them a little more timely than that, but it's very possible it could be a year.
All right, we can go ahead and move on. Oh, what is the difference between the office overhead rate and the field rate?
So for those that don't know anything about office and field rates, that's a method of calculating overhead that generally is elected by the firm, where they calculate two different overhead rates, one what is what's considered the office rate and one that's considered the field rate. Not required by IDOT for you to have a field rate, but generally firms will do that if they have a lot of work, like your construction inspection stuff, where they're in the field the majority of the time, and IDOT is paying for, the field trailer, computers, internet, basically all the office stuff in the field IDOT is paying for. Firms will generally, I shouldn't say generally, firms can calculate a field rate, and that's what they would use to bill on those projects, because it's a better way of applying the appropriate costs to the project. So on these field projects, you're not using as much of the home office support. You're not using a lot of those expenses. So it's not always appropriate to bill that full overhead rate on those projects when they're not benefiting from those costs, if you will. I hope that made sense. I hope answers your questions, May.
Yeah, thank you.
But they're very few and far between. So don't think, oh my gosh, I need to now. Do I need to do it? They're very few and far between. We do not have a lot of firms that have them. So out of the, we've got almost 400 firms. There's not very many that have them.
Okay. So we're going to go over the available resources that we have for IDOT. The Building Blocks of Success Workshop series will continue through April 2024, and you can register via Eventbrite. The link is right there, or you can use the QR code, scan the QR code. Next workshop is March 12th, the benefits of using accounting software. Again, March workshops are, this is a flyer with the March workshops. You can go on Eventbrite or again, click the previous QR code, and the April workshops are on here. If you have questions before the actual workshop, you can go ahead and submit in advance by scanning the QR code and visiting that visiting that website. You can, this is what the questionnaire looks like before you enter. It's very simple. Workshops and webinars. All of the workshops and webinars are recorded. So IDOT does have a YouTube channel. You can visit and view our workshops. You would have to go into the playlist, click on the playlist. Make sure you go on the consultant YouTube playlist. And here you'll see our past presentations, and then today's presentation will eventually make it there. You can re-watch it, or again, we will be sending out the recording for this. You can scan the QR code or click the link in the chat to provide feedback about this session. And then just a reminder, you will receive a following up email including recording of event, presentation, links to resources and programs, upcoming workshops and events, contact information for OBWD staff, consultants, and contract compliance officers. And here is the contact information for supportive services or Bureau of Small Business Enterprises. So with that, we are concluding today's workshop. Thank you everyone for attending. Again, our information will be in this presentation, and you can contact Megan, Michelle, and I for any questions. Thank you, Brian.
Thank you. And
Thank you.
yeah, we hope to, if you don't receive that email from me with the presentation today, it will be first thing tomorrow morning, but hopefully it will be in the very near future. Thank you all very much.
Thank you.
Thank you.
Thank you.